What's going on, YouTube? This is Jordan with Conquer Trading and Investing. In this video today, we're going to do something special. We're going to start this off a little bit differently because in order to prepare for what we see potentially happen next, we want to look at what just happened. But let's do that going off of yesterday's analysis. Yesterday, before that really sharp downward abrupt price action, I want you to get a look at the way that we were seeing the market ahead of that. And I think that's really going to set up a lot further clarity for what we think is potentially going to happen next. Let's do that together before we get started. If you're new here, welcome. And if you're not, welcome back. Again, this is Jordan with Conquer Trading and Investing. Go ahead, do subscribe to the channel, hit the bell icon to be notified of new uploads. And if you had the opportunity, if you enjoy the video at any point in time today, please do go ahead and support me and the channel by hitting that thumbs up. All right, everyone, without further ado, let's get into it. First, let me just talk about that. I agree, Aldo. I don't really love the price action over here. But look, the close was good. Here was the previous yearly high, and that was around 31,157. And we closed above it. So that was like, okay, we needed that to happen. That did happen. And since then, we've come ahead and we back tested it. Okay, there's nothing wrong with that. That's so far okay, right? I want to take a look at this, and I'm just gonna do one simple thing over here because we need to tag that. Like, and by the way, and I know I pointed it out, and I think it's very important here because if something is taking shape and form, and you remember 2020 summer bull market breakout, and the bull market breakout went almost exactly like this, but then corrected 20%. So a bull market does not mean up only. There are very few stages of the bull market where it's like buckle in, it's liftoff, and we're rocketing. And when that happens, you see massive gains take place in short amount of time. But what bull markets are really doing is they're like making it so that the weak are not able to participate. And weak doesn't mean that you're just going to blindly buy and hold. That's silly because there's no like, look, we've been watching from the bottom the potential bull market breakout and calling off each repair as they happened. But I'm continuing to watch when this thing breaks and when this time is different. So I'm not, you all know my posture. That hasn't changed. But what I'm getting at is, look, we want to see us tag over here and we want to see us break out and go up. But if we did correct hard, there's nothing wrong with that if we hold over here. If we don't hold over here, it would be bad news bears. But even it's not up only. If we have a correction, be prepared. It might be a big speed bump, and it's not going to be likely like something like this, where it's just like quick in and quick out. Likely, it's going to be something a lot like happened back in 2020, that summer, when you saw after the breakout, right? Breakout. Oh, and then like a long moment of tension or a long week of tension. That's likely what would happen if we saw some type of, and I look, I hope that we come into here and then I hope we break out. If you go ahead and you just move this line, if you were cloning this line with me, this one over here, and you, I wish I could do it. I can't. So I'm going to have to just move it up manually. And I'm just moving that up off of right over here. You could see my touch into it. And then over here, you could see the touch into it. But most importantly, because of this, right? And the recent price action along that line. And, we want to hold this line. So that's coming in somewhere around. And probably the easiest way to do that is those lows over here. Just so I have a mental number in my head. That's 30,250. I want to jump over here and I want to see that. Look, that was that last line that we had over here. Remember the line that we had that from that resistance right over here, and that is coming in 30,320. I'm going to lower that now to the bottom, right? What the number I just gave you, and we want to hold above there, and you could see that our bottom line over here is going to keep rising. So as we get towards the FOMC, right, coming up later this month, that line is going to be coinciding with that line. That's what we want to like for the most easiest bullish case to continue. At least we want to hold that. If we break below and close below that, then likely we're coming in for that deeper correction. And that deeper correction, you know what? Is as long as we're able to hold the levels that we spoke about. I'm gonna jump down, bring this back, and that would be coming in over here. We're fine. All right. So patience, because the bull of all bulls is not running. There's lots of expectations of a lots of people putting out there, changing their counts and now putting out bullish counts about new all-time highs into 2023. I don't think so at all. But I also didn't expect the Nasdaq to melt up as it is. So who knows? And we'll see. I tried showing you that for the most bullish, if we go back to that area we were just looking at, and we look at what it was like when we saw the bull market breakout occur back in, and we had that massive fourth quarter. So you looked at something like this, and this is what would be needed. So right, I guess that it means it's possible into January, right? So the most bullish scenario that I could come up with would need to transpire. And we did see, in all fairness, and I always put it in the back of my mind, that we did see in the summer of 2021, we saw a price go from $30,000. It hit a new all-time high above $63,000 within 3 months, but it took to November in order to hit that 69,000. So it's possible, it is possible, but I'm reminded of liquidity and where it is on the risk curve. You're seeing right now, this time of cycle, a lot of those funds flowing into, first of all, tech and stocks, and it makes a lot of sense. This is also a nice repair that we've all seen. This is also a really nice repair taking place. On the daily, we closed above once, back below, back on the right side. On the 3 day, it's the first close above. We want to also, at the same time as we watch that little lesson we gave above 30,200, that's coming in around, that's coming in as a little higher. We want to stay above this line as well. All right, here we go. Back in real time. And we're going to pick this up exactly where we left off. We're going to do it with 4 different charts. We're going to be looking here at Bitcoin on the log scale. We're going to look at it Bitcoin on the linear scale. We're going to be looking at this chart that I call technical breakdowns. And you can see that we were just talking about this line of repair we need for continuation. And we're also going to be looking briefly at this downward sloping descending channel that we've had a break out of. And you can see we're still above it. So we're going to do that starting off with the linear chart over here. And we're going to bring it back to what we just did in the previous segment. And I'm going to add in this trend line. And you can see where price is right now. It looks like it's on the verge of closing below there. The price that we put out was 30,200. And you could see that 30,200, that horizontal line that we have over here that I'm highlighting right now, and price is on the verge. It's barely above it. It's retesting it. Nothing has changed from when we looked at price action, why price was closing above to new yearly highs, 31,380. And you can see at that point, we would say that, well, we need to see, and we would like to see at least the leg up into this area over here. We have some horizontal resistance at 32,600. We have this downward sloping resistance as well. We have to, at least off of this resumption, this is going back to the analysis that we did together here. On the resumption out of here, we needed to see at least price reach this target. If not, it's not looking good, and we could be correcting downwards. Now, again, and I just want to revisit with you one more time. I think it's very important to talk about that. If we go back to, a lot of people are hoping into the end of the year that Bitcoin can make new all-time highs. For that to happen, we would need to see some very similar price action that we saw into the fourth quarter of 2021. But prior to this fantastic run up, and we'll take a look at that run, what it looks like over here. Let's take a look at what that run looked like and what price would need to do in order to go ahead and actually hit those new all-time highs this year. But we did before, and on that breakout, we saw the breakout, and we saw this long consolidation period. I've seen some people new to crypto say they've never seen such sideways consolidation take place in Bitcoin in a bull market. I mean, obviously they weren't here for the last breakout of the bull market, but you see that long consolidation, and then you saw a massive shakeout, retesting the breakout. You could see that breakout, retesting, and you don't know which way it's going to go out of the box, by the way. You don't know that it's going to be a successful retest. And it's a hold your breath type moment. In this case, we wound up, and it wasn't quick and easy. A lot of people want, breakout straight up, break down straight up. Sometimes it's very difficult. This is one of those cases over here. It took some time, but out of this long consolidation, it led to the massive, massive run up, not only to new all time highs, but then significantly and quickly above. Let's take a look at, just for fun, what that would need to look like if we were to see some similar type price action occur today off of where we are, and what's to come towards the end of the year, and why I don't necessarily embrace anything like this. I want to look and consult all different areas, and let's pretend that we had some type of breakdown. Let's say that we are breaking down and we come all the way down, and we want to hold over here. We don't want to retest the trend line breakout. We want to ideally hold over here because this important trend line of the US banking crisis touch, and then over here the Binance and Coinbase litigation from the SEC, that we would like to see that hold. It is possible that we correct further down and hold in this area. This area would be somewhere around 26,600. If you look on linear, by the way, and you could see that same trend line drawn off linear, it's it's more correct on log, but nevertheless, you could see the touchdown to the linear would be coming in that area that I'm just pointing out to you, 26,600, which is why I say that you could break this line and come down and touch into this breakout of this trend line. Let's see what that would look like if we did break down and touch the trend line, and what type of price action would be needed towards the end of the year to actually go ahead and make those new all-time highs. And you could see it. We would need to really closely mirror the price action, what occurred coming into the fourth quarter of 2020 in order for that to happen. But there was a major difference, right? And that major difference was that instead of the Fed tightening, which they are right now, and they're expected by the end of this month to raise rates again, and likely potentially it's not the last rate hike of this tightening cycle. We do continue to see inflationary pressures come off, and that's been very, very conducive for this move we've seen not only here in Bitcoin but across risk assets. And if that continues, that's good, but that's expected to cool off in a couple of months. So as we're talking in what we need to happen into the end of this year, we are running out of time. So we'll look at that very closely. We're going to look at together in an upcoming video, actually, what would be the case, like the bearish case versus what would be the bullish case. So the most bearish case for 2023 versus the most bullish case, and then we'll look at what our projections are. And we tend to be somewhere in the middle, and that's a good place to be because we really don't know what's going to happen. We have to continue to stay on the right side. Right now, we would like to see a few things happen, and among them are we would like to see this line hold where we are right now. You can see that we're on the verge of potentially breaking down. We want to continue to close above 30,200, and that will continue in the days ahead next week, rising as we slope higher. It's a pretty steep slope. You can see from this view over here, right? If we close below, I said 30,200, that likely is putting us into a place where we could begin to see a correction. Now, it's in linear, you could see that there's been a couple of times. One, we closed below, two, and three wicks below. So this trend line that we extended out, and we did this before our last meeting together, to all of us here, you can see that we've also tested that a few times. It is potential. We could still again close below that trend line like we did over here on July the 6th, and we could still hold this support. At that point in time, I would say the price action is not favoring that happening. Our analysis stance 30,200. We need to continue to close above that. It was very nice seeing the close above at a new yearly high above that resistance over here at 31,000. It didn't stick. We didn't make the move that we want to see into the next target. And we if we were able to reach this target, it would be nice to break out. If we break out, we got a bigger move coming to the upside. But we got to be aware of both sides. And it's not that if we don't hold this area over here, if we're rejected again in that 30,000, $31,000 area, the peak high was 31,000. Now we've closed above it once and we've closed above it twice. So that resistance is kind of, I would say, very light. You can see I have a very light trend line there. Uh, but that's the yearly highs though thus far. If we break down from here, we could be headed lower. And if we're headed lower, that's not necessarily a bad thing. I tried to show you the price action of the last bull market breakout. If we do break down further and we were to lose this trend line over here, at that point, that would be a big break. And, I don't know what the narrative will be at the time, but we could be looking at some further downside pressure. And then we're going to want to see and hold our breath as we come into this. I'm going to move this down a little bit now to the low over here of where price found support at 21,120. I had it a little bit higher. That would be the utmost important test of support. If that didn't hold, if we were to break down from there at that point in time, if we lost this line, then we're looking at what that most bearish case would be for 2023. And you know what? Things continue to look very healthy. That could change very quickly. I didn't like the price action that we saw Wednesday's CPI when we saw that all risk was pumping and jumping, and we saw that Bitcoin was not able to hold its highs and reversed closing at its lows. If we didn't see XRP win that portion of the lawsuit, I don't think that we would have seen Bitcoin and crypto pumping yesterday, day before yesterday on Thursday. And to see that then reversed again, well, we still continue in this zone, this consolidation zone. And we'll take it from there. I was looking at this on a 3-day view, and it was nice to see that price was getting ready to close above it. That was yesterday morning, and it closed below it again. So again, we're going to need a close above here on a 3-day time frame. We haven't seen that yet. We have seen two closes on the daily. On the daily time frame, it's twice, and we're having a little bit of trouble. And you can see from this view also, if I move this trend line, you could see that exactly where we're. And I'm just lining it up on the touches down over here, and then I can see the nice, beautiful touches here as support, now resistance, and that's the fragile state we're in. That's okay. There's nothing wrong with understanding exactly where you are and what needs to happen. And yeah, close below here. That could have us then retesting below, and we'll be fine. If we look at this from a CTM 2.0 perspective, it's clear to see. Let me jump on the 8-hour over here. Let me go ahead and then move the chart to the 8-hour. And you could see that, well, you know what? That looked like a good place to take an entry. That close above to new yearly high, 31,000, breaking out again above the consolidation. Moves and expectations were for a move into the next target area. And that's what stop losses are for when the momentum fades, and get out and make sure that you stay continually on the right side. So momentum still has yet to take off. We look across the board, and the volatility inside crypto continues to be at historic lows. We know that consolidation leads to expansion. A big move is coming. You want to be on the right side of it. We hope that it's at that move to the upside. We hope that we're able to find and break out, and then move. Let me get that off the screen. We hope that we're able to actually make a bigger move outside of this resistance here. You might wonder, wait, how come you have that naked trend line? There's no touches to that trend line over there. Now I could see, Jordan, that horizontal resistance in that area, but what's going on with that trend line? And it's just finding over here. If you're all familiar with this descending wedge that Bitcoin has broken out of, that is the lower trend line support. Throughout Bitcoin structure, you will see that it comes into play. You will see it at multiple places. I'm touching them for you so that you could get a quick view of it, right? And you could see that That right there then means that we got resistance up there, breaking above that trend line resistance. That then is taking us somewhere towards, we got some horizontal resistance in play somewhere around, let's call it 39,000. It is give or take a thousand or a couple thousand in both ways. But we would love to see a move into this resistance and a next leg up. If that happens, if we're able to see that type of price action occur, it is true, then it potentially we could be looking at. Do you remember when I put out the 0.86 retracement fib? That was in January. I believe that was in January. I'll find the tweet for you. Right? A lot of people at that point in time had very bearish expectations. We could see from this angle, we want to hold this red line. If we don't, we'll be prepared ahead of time, and obviously this time would be very different. But if we're able to break through that area that we talk, you can see here in the purple line, that area of 33, 34,000. At that point, we come into that resistance of the yellow line. A break that point for this year before the halving, the retracement to the 0.786 retracement fib on the log scale is completely into play. A lot of people at that point will be talking about new all-time highs coming in 2023. As they are right now, we'll be prepared in advance and make sure that we take a look at it. We did see the breakout of the channel, of the descending channel, and I'm going to show you here on the with price bars, today's price bars, and the reason being is you could see below, you could see all these wicks into it. If I'm looking here on the daily closes, you don't see any price action into there. Isn't that amazing how the structure of the market, you could see the consistency throughout? And that's why over here I had a one touch trend line. We did not see at that point to move into resistance and then initially rejected and thus far holding above it. Interesting, right? And that's very similar to that one touch trend line we were just looking at together over here. This trend line over here, and why they're important and why they come into play. And we want obviously hold the breakout above the breakout of the descending channel. If that breakout was a false breakout, oftentimes false breakouts, they do lead to potential bigger moves going in the other direction. And that's why this one trend line keeps coming up, and it's just so important. And I hope that we stay above it, right? I could go to the over there, and you can see it through the intraday wicks coming into it. We want to hold that trend line. If we broke out above here, came into it and tested it, that's fine that we didn't make the breakout as long as we're able to hold that and come back up. If we break down over here, we will always want to be aware of our risk is right now. There's a lot of people putting out very bullish outcomes, and it's very easy to get caught up in all the FOMO. We want to stay on the right side. That takes a lot of work. Thanks for being here to put a session in over the weekend. Everyone, have a beautiful weekend. Again, if you're new here, welcome. Everyone, have a beautiful day. I will talk to you later.